Ladies and gentlemen, welcome back. Thank you for tuning in once again to hear me ramble on. However, this time I am going to be rambling on about, is Tesla too high? This question was just recently answered by a very important person going by the name of Elon Musk. Thank you very much. He recently tweeted out a post stating, and I quote, "Tesla stock price is too high, IMO." That means in my opinion. Man, this guy cannot stay off of the tweets. It's insane what this guy can do. I mean, most of the stock crashes on his part have just been because of him tweeting. I mean, it's the roller coaster ride that it is to be an investor in Tesla is primarily in part due to Elon Musk himself. I mean, this guy has sent out a 420 tweet, if you guys haven't heard about that one, that sent his stock plummeting down. That put him in a whole world of trouble. Now he's sending out this tweet among a bunch of other ones that he sent out in the past. However, this is the most recent one, and now his stock took another plunge. I mean, this tweet has yet again absolutely destroyed the hearts of every investor in Tesla, and to me, I'm a long-term investor, and I like comedy. This is pretty funny to me, I'm not gonna lie to you, because I know that his stock price goes down because of fake news, because of stupid tweets, because of just dumb things that are so temporary, it's funny. And if you're a long-term investor, it just is what it is. The stock is going to go, and it's going to rebound however it is, wherever this company is going to go. The company, how the company is ran, that's what's going to determine in the long run how the company is going to go price. So these things are just temporary, but it is painful, okay? Because there are people that do take losses in times like this. There are people that do actually get affected. So I'm going to break down in this video, is Tesla stock too high? And the only way I can tell you that is based off of what I've invested into. So to give you guys some insight, we're going to switch over to Robinhood real fast. We're going to switch to the 5 years, so that way you guys can kind of follow along with me. Because I personally bought into Tesla around 2017, 2018. For around that time, I had about a $269 average share price, which was, right around, I mean, for years and for a while, the stock was pretty much on a flat line. However, you do see a lot of action, you do see a lot of volatility, and a lot of this has to do with a lot of media wars, etc., that we'll kind of get into. However, that was kind of where my adjusted price is. Nowadays, I've invested a little bit more into Tesla, and I have brought that down to around $240 as my average share price. However, in 2017 and 2018, Tesla's balance sheet, it didn't increase. It actually didn't do anything, really. It almost flatlined and dang near lost, and it just wasn't very, very good. It didn't really prove anything. Tesla was, and kind of still is, in its infancy, in the sense of it had to prove that its business model worked. Tesla was building a car manufacturing company that was unlike anyone has ever seen before. It was a combination of technology, it was a combination of ingenuity, it was a combination of old school automobile style of designs. The way these cars look, it's absolutely beautiful. I mean, just looking at this car right here, I mean, you can just see how much Elon Musk puts into the details, the finer details of his cars. And so with that, there was investing during those times, there was a lot of speculation, and I would even go as far as to say investing in these times right here and right now is still a speculative play, in the sense of his balance sheet is not what I would necessarily I wouldn't necessarily invest into, because I usually look for a company that has a lot more asset to liability ratio. I want a company to have like 2 times more assets than it does liability, and I want it to have a lot more cash than it does debt. I want it to be a healthy company, and in this sense, as of right this very second, we'll kind of get into the financials. Tesla's not really sitting into that kind of boat. However, it is showing that it is growing, it is showing that it is maturing, and it is showing that it is growing its balance sheet, and it has proven that its business model does work, and it's showing that it's going to make every other car company obsolete, and this is going to be pretty much one of the only ways to start actually building a car company infrastructure, which is the way Tesla does it, from the ground up and from internally. It builds everything and tries and make everything by itself, for itself, so that way it cuts down the cost, it cuts down delivery, it cuts down production time. It literally just exponentially grows the company from within and decreases the cost of all expenses across the board. When it comes to how much do the parts cost, well, you're making them. How much do the battery cells cost? Well, you're making them. So you can control those costs, and you can start determining how much you put into these cars and how much you get profit wise. And when it comes to Elon Musk, you can also start manipulating the actual design. So the newer models are the old school models went from hundreds and hundreds of parts that had to be assembled into these cars, and now it's down to just basically 2 parts make up the entirety of the shell of the car. I make up almost the entirety of the car. I mean, they can almost put these cars together in a matter of seconds, like Hot Wheels cars. It's insane what they're able to do. So Tesla is leaps and bounds above everybody else now. So what we're going to do is we're going to compare what I originally tested or bought into in Tesla and compare it to what it is now and see, is it overpriced? Is Tesla fair value? Was Elon Musk wrong? I don't know. So we're going to try and get into that here a little bit. So let's switch over to a PDF that I found that breaks down a lot of what separates Tesla from every other car company and what we consider in the investment world as a huge moat. Okay, you always want a company to have a moat, which Tesla's moats is one of the biggest driving factors as to why you can literally argue Tesla could not be a speculative play. It's almost a high growth technology play. And we can make arguments all day, all long. It doesn't really matter. At the end of the day, are you invested into it or not? I am. Are you? Who cares? So what I want to get into is the nitty gritty, okay? I want to get into the facts. What we're looking at here is a gigafactory production outline. Gigafactories is one of the biggest separating moats Tesla has, okay? What is the most expensive thing in an electric car? That's going to be the battery cells, the batteries that make up the car to have it get from point A to point B, and to be able to have the mile per, the distance that each drive can go. So this right here is going to break down not only how many battery cells are being produced by the Gigafactory as compared to the rest of the entire world, which is insane. The fact that a Gigafactory can produce more batteries than what the entire world is already producing right now, and that's just one Gigafactory. Tesla, at this current rate, owns 3 Gigafactories. One is in Buffalo, New York. The other, Sparks, Nevada, and the third one is the most popular one, Shanghai, China. That is the most recent and current one, and that is the one that's blowing out all the numbers right now and has the highest growth potential out of all of them. They are growing a 4th one, and it is going to be in Berlin, Germany, which is just phenomenal because that's going to attack the EU market, and that's what we really, really, really want. So there is huge potential in these gigafactories, and Elon Musk even goes as far as to outline exactly what the gigafactory process flow is. They literally take the raw materials, they break those down, they make the actual battery cells, and then they put them into the cars. So what they're doing is they're cutting out the middleman, they're lowering the cost of the battery cells, and they're drastically lowering the production speed because they don't have to worry about shipment time. It's all built in one gigafactory. The battery cell, the cars, the test driving, everything that Tesla needs to build and test drive every single car they make is and can be done in one gigafactory. So they are building a gigafactory in each and every desired location, so that way they can get the fastest delivery time to every single customer, which is in the long game, detrimental to every single car company in today's time. Okay, GM, Ford, BMW, they're all going down. Okay, what I'm switching over to right now is a Hypercharts. If you guys really want to get to know some numbers about Tesla, Hypercharts is a great website. What I really want to know is, what is Tesla's market share? Currently, as it sits, we are dealing with a 1.3 market share percentage. What I want to go into is 1.3 doesn't seem like a whole lot, which in the grand scheme of things, it's not, because Tesla is still in its infancy. It's still beginning. What I want you to compare that to, though, is look at BMW. BMW is a very well-known brand. They're sitting at 2.62%, okay? Mercedes, 2.94% market share. Okay, so these big name brand companies, they don't even have ginormous market share value. But what that also tells you is the potential for growth that Tesla has, because not only are they competing against all of these companies, but they're competing against EV companies, and they're leading in EV companies, and they are starting to lead over every single gasoline company. I mean, they're making leaps and bounds. Every year they're gaining more and more market share. Eventually they're going to be up into the Toyota and Volkswagen, which is almost double digits. And in Toyota's case, it is double digits. If you go to Hypercharts, what you can see is their Tesla Model 3 is already selling among Toyota, Honda, Nissan, Fords, Chevys. They're already selling more than the big name dogs. The growth and the business model and not only just the recognizability of this company is expanding, and they're doing no marketing. All of their marketing, Elon Musk is a genius. He's just using social media. He's using people like me. He's using people like everyone else on YouTube that spreads the word of Tesla, and everyone else that has a phone that takes a picture of Tesla, every car owner of Tesla. Literally, he's using people, just ordinary people like us that just want to better the world and better society, and not only that, but enhance other people's lives, because that's what these cars do. Ultimately, it's enhancing your life. It drives for you. It's going to be able to get you in sooner or later, in no time, from point A to point B, no matter where you want to go in the entire world, without even putting your hands on the steering wheel. Do you know what kind of freedom that allows you to have? That we spend so much time driving, it's almost nauseating to think about. I know I do. My full-time job allows me to drive insane amounts of time, so it's daunting. It gets tiresome. Imagine doing something productive during that time. I mean, just the thoughts of this it's crazy. And also the revenue streams that you can produce from these cars that drive themselves. I mean, you can put TVs inside these. Now you can start selling video game apps. I mean, the possibilities are endless. Okay, I'm not going to get into absolutely everything. We're going to only focus on the cars right now, and we're not even really going to focus on complete full self-driving capabilities, because that's not even come to full fruition just yet. We're just going to stick to what is here and what is now. We have beautiful cars that are taking over the entire world by storm, and they're competing against Toyota and the Hondas, which are the big name brands for the cheaper models, and they are doing it in an elegant fashion. I really do think that they are changing this. What we're going to switch over to right now is some financials, because they did just release their 10Q report, which if you guys are not familiar, it is just like a 10K, except it only focuses on the quarters, okay? Which is why I really don't like taking them into account, but it does give you a more up-to-date financial status of the company, so we will look at it. However, when I'm going to compare my numbers as to when I invested in 2017 and 2018 as to now, I'm going to be using their 10K numbers because that gives you their full 1 year spectrum, and that's really what you want to take into account. So what we're switching over to right now is their 10Q, and their 10Q report is and was, if you guys tuned into the financial conference call, I mean, these financial statements blew everyone away. As you can see right here, their cash and cash equivalents, it increased almost $2 billion, about $1.8 billion it increased. That's a massive increase to the cash balance. So that's amazing because that shows stability, especially in the time of this virus that we're facing worldwide. What we are dealing with is a company that is, again, showing maturity. It knows that we're going through tough times, so it wants everyone to know that we have enough cash to get us through this. However, if you look at their liabilities, okay, well, first let's take a look at their total assets, okay? $37.25 billion. Not a huge increase from the $34 billion that we had in December 2019. However, an increase is an increase. But if you look at their total liabilities, they have quite a bit of debt, okay? And that's the one thing that's going to get us a little bit in trouble when it comes to, is this a growth company? Is this a spec company? By that I mean speculative. Well, really that's up to you. It's all personal opinion. However, if you take a look at their cash and cash equivalents, we're looking at $8 billion. However, they have in debt and finance leases about $10.6 billion, and you can tack on another $2.6 billion in long-term liabilities, and that's not even tackling deferred revenues, etc., 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 etc. Okay, so they do have some debt issues. However, they do have a lot of cash on hand, and they're managing their debt very, very well. This is a company that knows how to weather a storm, and they know how to get a company going. And the other thing that is huge when it comes to an automotive company is they know how to scale new cars like nobody's business. And by that, what I mean is they can take a new concept car, let's just say the Cybertruck, and they can take that car from the very concept and take it to the finished product and scale that on let's just say millions of people, right? In the future, there's going to be millions. But they can scale that to mass proportions in a very, very quick and efficient amount of time. They've done it to every single one of their new models, so they've perfected, and they've seen their mistakes in their previous models, and they've made corrections to it. So they really have stepped up their production line, which is why going from that whole, you know, it takes about 100 etc. parts to build one car, now down to just about 2 parts to build a car. I mean, it's almost mind-blowing to think of something like that, but that's where we're at, and that's what Tesla's doing. That's what Elon Musk is doing, and that's what he's showing the world. This is what we are capable of. We have the technology to do this, but no one's done it because no one's wanted to break their traditional model of gasoline. This is how we do it. We need service revenue. We need to have cars break down, and we need to have fluid transmissions and all these other type of oils that you have to switch out. No, we don't have to live like that anymore. That's not the world we live in. Things can be simple, beautiful, elegant, and they can enhance our lives, and we can have something that appreciates in value, not depreciates in value. So this can actually, the cars, as of right now, can be classified as a minor investment if you really want to think about it, depending on how you do things with the car. I mean, it's incredible. So switching over to the 10Q, because we're not going to really focus too much on that. We're going to go over to the 10K. What I really want to get into real fast is just a comparison of where the numbers were sitting when I originally invested as to what they're pretty much sitting at as of right now, okay? What we're going to really focus on right now is cash and cash equivalents. I want to know how much they got. In 2018, they had about $3.6 billion, okay? In 2019, they increased that to $6.2 billion. That's an increase of about 70%, okay? That's drastic. And again, maturity. Total assets, what we're looking at, okay? We're looking at from 2018, they had $29.7 billion in total assets. That increases to $34.3 billion, which is a 15% increase, okay? So we are talking about a company that is showing maturity, and we are talking about a company that is now showing that their business model is being successful, okay? Now, their total liabilities, it goes from $23.4 billion to $26.1 billion. That's only an 11.8% increase. That's not terrible. Their overall, like, long-term debt went from $9.4 billion to $11.6 billion. A 23% increase, which is a little bit on the concerning side, but they did have to take out some things for the new production of the Gigafactories, which in my case, or at least in my book, kind of gets a write-off because I consider that a long-term investment. So inevitably it's going to be a short-term hit, but for long-term gains, it's going to be phenomenal. So that is debt that I consider acceptable debt, okay? Now, what's really important is their automotive sales. Is their business model truly working? Are they really getting their cars out there to the people? And if you look at it, we go down here, we go down to revenue, we look at their automotive sales, and we see drastic increased numbers. From 2017 to 2018, we had a 106% increase. Yeah, that's real. 106% increase. Now, from 2017, which is pretty much where I invested, to 2019, we had a 133% increase, which is beautiful. Now, does that justify the increased price of the stock, though? I mean, that's another story, because the increased price of the stock jumped up about 208%. So a stock price jump of 208% and car revenue sales of 133% on top of all the other increased sales that they've had. I mean, does it outweigh it? Does the addition of the Gigafactories start to play a factor, and does that start tilting the scales up in favor of more maybe of fair value? To be perfectly honest with you, I'm still in the boat of this price is a little bit overvalued. I'm with Elon Musk. I made a video about this, not specifically just about this, but I touched on this a little bit on a previous video, where I think the $700 range is a little overvalued. I would love to start seeing this stock around the $400. I would heavily start investing around there. I think that would be a good buy. I think a fair value for this stock is around $500 to $600. But $700, $800 right now during these economic times, especially during these economic times, even though they had great, phenomenal numbers and their business model is shining, I just think that this stock should not be where it's at right now. It should not be. And there's a lot of stocks in the market that shouldn't be where they're at right now. So it's not just Tesla. However, I am specifically talking about Tesla in this video, so I am going to have to say that right now I would have to say this is a pretty overpriced stock. Although I do love this company, and I wouldn't hate it if you guys started investing now, but if it goes down, I wouldn't be shocked, and I really do want you guys to start building a position. So if it goes down, we're long-term investors, so we don't get discouraged from things like that. We continue to invest on, we continue to build that position. So let's say you buy now, and it drops down to $700 or $680, well, you keep buying. You keep buying, you keep buying, and what you do is you average costs down. That's what all smart long-term investors do. No one can predict the bottom. So what you do is you just average costs down. And then eventually you build a nice, strong position, and then eventually the stock goes up, and you start reaping the gains, and then you can play however you want. Sell a little bit here, or continue to hold. The game is yours. However, as of right now, I mean, I've made a lot of money on this stock, and I've continued to hold all my positions. I haven't sold one stock of Tesla. I'm just waiting to buy more. But as of right now, I just can't purchase at this stock price. So I hope you guys had some kind of education in this video. I know I rambled on a lot about a lot of the different stuff that probably had nothing to really do about the financials or anything important, but there's just a lot of history to get into this, and there's a lot that goes behind Tesla. There's just a big story to get into. So there's a lot more than just the financials, and there's a lot more than just what the media tells you, because a lot of that's slander and a lot of that's fake news, even though they're starting to really turn around and be a little bit more positive, and they're starting to actually shine a little bit more truth because people are aware of their BS. However, you know, it doesn't matter. We invest on, we observe the market, and when I see a price that is enticing and something I like, I buy. So I hope you guys learn the same and do the same. And like always, invest on and stay strong.